What did the Fed say? And let's summarize what Chairman Powell said. This is from 9/18, a couple days ago, when they cut the Fed funds rate by 50 basis points. Summary of Fed Chair Powell's statement. Fed believes that the economy is strong overall. This is Fed, not me. Don't shoot the messenger. Fed has growing confidence that strength in the labor market can be maintained. Well, the previous chart is not saying that. Consumer spending has remained resilient. We've been talking about that. How has it stayed resilient? Plastic, right? We know what's happening to credit card debt. And then if you guys already peeking on the little window or the chart next screenshot, I talked about this last week. Savings rate are way below what they should be. And the CC debt, credit card debt, is through the roof at an all-time high. Sean, thank you. There's his super chat. Thank you, man. Hey, welcome. Hopefully you learned something. By the way, Sean was one of the drivers in the Most Perfect Union video that is gone completely bonkers viral. It's just hit 2.9 million views. Okay. I think it's in their top 2 or 3 videos that they have ever put out. And I'm glad it turned out that way, but we have more plans on that, but we'll talk about that on the other channel. So Fed also says inflation has eased, but remains above the 2% target. Okay. Labor market is now less tight than before the pandemic. And in fact, there was an article this week. He even actually during the press conference said, all the illegals coming into this country are adding to the unemployment rate. Like, I'm not going to touch that. You guys can discuss that amongst yourselves. Yeah, labor market is less tight because we have 1.5 million people that just walked over across the border, Mr. Powell, and they're willing to do all the shit that we're not supposed to do, or we're not willing to do for at least free anyway. And number 6 was Fed is moving to a neutral stance, but not on a preset course. Okay, fine. So why is a 50 basis point rate cut needed if the economy is strong? Great question. Now, during the news conference, did anybody ask him that? Of course not. Why would they? Because it's all, hocus pocus, as you guys know. So, and then the Fed said they're going to decide meeting by meeting what to do with interest rates. Fine. That's always what they say. However, they're clearly signaling that inflation is heading to 2%. Is inflation heading to 2%? On the next topic, we're going to talk about that a little bit. What has happened with your auto insurance rates? I don't see 2% there. So time will tell if this is the correct take. Okay. And, there was a response to this tweet by Kobasi Letter, and he put up this chart. I exactly put this chart up last Power Hour, last Friday's Power Hour, which the video is going to come out probably today. Look at that. So in that chart, there is a green spiky line that's on its butt now on the lower right-hand side. Look at the lower right hand, look at the upper right hand. The red line that has been going up and then took a break while the green line was spiking was during the pandemic. What happened during the pandemic? Government printed 8 trillion, sent it to everybody sitting home. Everybody started paying their debts down. The red line is the total outstanding revolving credit card debt in this country. That's what we do. What we do is we borrow and we spend. So look at that red line. It's going upper right-hand corner through the chart now. That's the revolving credit. And the delinquencies on that credit is through the roof as well now. It's close to up to 9.1% of the total outstanding debt. What is the green line? That spiked during the pandemic. It's the savings. Look where the savings are. So what we did during the pandemic, because government printed the money, sent it to us, we saved. We, in fact, paid our credit cards down. Great. We paid off our mortgages and whatever we did, we did. Now where are we? Literally 2 years after the pandemic, 2.5 years, we have blown all the stack again. We have borrowed more. We have spent more. The U.S. economy, by the way, GDP, gross domestic product, depends 75 to 80% on consumer spending. If you have an economy that depends on consumer spending 80%, you have no manufacturing. And when the economy slows down and people tighten their belts, what happens? You go in a recession. That's why I'm kind of calling for one. But this is a bad picture, and I agree with it completely with that last sentence. Why is a 50 basis point rate cut needed if the economy is strong? As on the first point the Fed made, Fed believes that the economy is strong overall. 50 basis points is a lot. They don't usually cut 50s. They usually cut 25s. So you make up your mind. Are we going in a recession or are we not going in a recession?